Okay, good morning. Welcome to Stock Market Today. It's Tuesday, June 23rd, 2020. This is your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where you can follow along with this show. I get a lot of the content from there. Also gives you daily stock ideas to consider. It hits your inbox every trading day before the market opens. So U.S. equities were higher in Wednesday's trading with the NASDAQ composite marking its seventh consecutive gain. Growth and momentum extended last week's outperformance versus the cyclical value trade, and we touch on that in depth in our note today. Treasuries were unchanged on the day. The dollar came under pressure against the euro and sterling, but was higher against the yen. Gold finished up 80 basis points. WTI crude was up 1.8%, its highest level in over 3 months. As we get to the desk this morning, futures are pushing higher once again after a little overnight back and forth as it relates to trade with China. Asian markets were mostly higher overnight. Hong Kong up over 1.5%. European markets are rallying as well. Treasuries unchanged to slightly weaker at the back end of the curve. Dollar stronger on the yen, but extending the recent pullback on the euro cross. Gold up 30 bips. WTI crude is up 90 basis points to get us going on a Tuesday morning where I wish I had something different to say relative to yesterday, but I don't, and I'm not going to make it up. That's not my style. All right? Gaps above and support below as the new week begins and continues. All right, literally unchanged from yesterday. 3,000 to 3,100 is support, 2,850 to 2,950 below that. The February highs are in play if support holds. Resistance to those February highs, right? Not likely that we're going to get there in a straight line. 3,200 to 3,250 in the near term. We're closer to oversold than we are to overbought. Looking at that CCI 13. Chaikin money flow is bullish. So literally nothing changed yesterday, and kind of a quiet Monday morning, steady grind throughout the day. Very much still a balanced risk reward in the near term as far as I'm concerned. Quite frankly, I would rather get aggressive on the long side going through resistance here than kind of trying to pick a spot here. At the same time, I'd rather get defensive going through support, right? And in the interim, kind of not really play all that much. It doesn't intrigue me, doesn't interest me, at least for my time frames. I honestly, at the stock level, I haven't made a trade in my account in I don't know how long. Market in a minute. What are we writing about today? Well, 7 in a row for the NASDAQ. Stocks grind higher to start the week. Cyclicals continue to fade, and that's on a relative basis. And I'm going to show you the chart a little bit later on here in the show. It's, as I said, a key point in my writings this week. Growth is a leadership theme across market caps, and I touch on that in my note. What's amazing to me is that if I look at the ETFs, large cap, small cap, mid cap, growth versus value, large, mid, and small growth, bullish ratings at Chaikin Analytics. Large, mid, and small value, neutral ratings at Chaikin Analytics. So not only are those trends in place, but by our work, they're likely to remain in place. Gold on the brink of a breakout. Miners hold support. We'll take a look at that. Futures point to a higher open, as I said today. Major indices from a power bar perspective now. We see some improvement in the power bar ratios. Dow adds 56 basis points, 4 to 8 bulls to bears. S&P 500, 62 basis points, 94 to 115 bulls to bears. NASDAQ outperforms, 36 to 12 bulls to bears on that front. A lot of green on this screen. Small caps, also a slight outperformer, 550 to 266 bulls to bears there. Bonds, like I said, relatively flat on the day. Tech, your outperforming sector. And the relative chart for tech, it's a sight to behold. It really is a steady uptrend where if you've been overweight tech, even in a down markets, if you've been overweight tech and stayed overweight tech, I feel boring. It's because I've been talking about it for over a year now. you're outperforming. You should be outperforming anyway if you're disciplined about it. According to the Chaikin Power Bar, small cap stocks are more bullish than large cap stocks. Major markets are mixed. Taking a look at our stock of the day now. I'm highlighting Quanta Services today. Just kind of looking for some names that could potentially benefit if an infrastructure bill is real. Also could benefit in the event that inflation starts to pick up. Quanta Services, PWR is a very bullish rating, strong trend above a rising long-term trend line. It's in a strong industry group, construction and engineering. What I see is a very bullish stock outperforming the market with the intensity of outperformance beginning to pick up once again. Oversold with bullish money flow, right? If I wanted to draw a downtrend line here, we can say that it broke the trend line, retested, and is now rallying again. I think PWR is an interesting name here. For those looking for bullish opportunities. Take a look at it here, you can shoot against the trend line. You can shoot against the downtrend line from here. No matter what way you slice it, above 34 to 36, I think it's a pretty compelling trade here. You can draw your uptrend lines, right? You can just kind of see the setup, right? And the risk reward from current levels, right? 39.23, you probably have $1.50 of downside for 5 points of upside if you're framing it up as a trade. If you're looking at it more of as an investment, I think we're seeing a personality change here with the rating turning bullish. Stock beginning to outperform, under accumulation in the near term. Definitely a compelling looking name for those of you who are looking for bullish ideas. Let's hit our sector tracker now. Movement of the last 5 days for the major sectors. Tech, top of the list. Healthcare, top of the list. Discretionary, top of the list. Comms, top of the list. That is your growth trade, folks. That's your growth over value. That's your, in a slowing growth world, own growth, right? We saw the rotation, right? I was paying attention to it. I mean, listen, I'd love to talk about something different. I really would. But I'm not going to do that just for the sake of it. To me, I've said it for a while. The rotation trade looked counter trend in nature to me. It looked mean reversion to me, right? Chairman Powell came out after the Fed's last meeting and said he's going to keep rates near zero through the end of 22. Now I ask you, if the chairman of the Federal Reserve in the first half of 2020 is willing to tell you that he's going to keep rates at zero for the next year and a half, do you think he and the committee see growth? The answer is probably no. So if there's no economic growth, what do you want to own? You want to own what's growing. You want to pay a premium for what's scarce. Tech, comms, parts of discretionary, right? And look at what's fading here. Look what's down over the past 5 days. Industrials, energy, financials, right? REITs and utilities, bottom of the list as well. Kind of interesting there. So it's been our view. It remains our view. We're unwavered in our view. When the facts change, I'll change my mind, but the facts haven't changed yet. Taking a look at our industry in focus, speaking of tech, semi-services. Outperforming the market over the past 6 months by about 8%. Power bar ratio, very strong, 8 bulls to 2 bears, currently ranked number 8 of 21 subsectors. Moved up 2 slots over the past week. You should recognize Broadcom. I've highlighted it here. Rambus and diodes, other names, kind of less. Rambus, diodes, less known names, but always a good opportunity to drill down, right? It's easy to own NVIDIA. It's easy to own Intel. It's easy to own AMD. Do some work on some of these smaller, obscure tech companies, especially in the semi space, and you're likely to be rewarded. Take a look at a name like Diodes. Take a look at a name like Rambus, both with very bullish ratings. Broadcom, it'll always be a Vago to me, has a bullish rating, was highlighted in one of my notes last week. Taking a look at XSD here, what I see is a very bullish fund, 8 to 2, outperforming the market, oversold. Money flow a little punk here, I'm not going to lie. I don't like seeing wavering money flow near highs. Could be a sign that smart money's coming out. So what I see here is a rally to retest these previous highs and a consolidation. To be perfectly frank, I think if you wanted to add semi-exposure here in the oversold condition, I think that's fine. If it was me, I don't think I would add my full exposure. right? I think I would add a certain amount less than my full exposure and then take a look at it going through 115. Let's take a look at yesterday's movers and shakers. Gap caught an upgrade from Wells Fargo. CARR initiated buy at UBS. Quick serve restaurants were positive yesterday. Chipotle goes along for the ride there. HWM unrated here at Chaikin Analytics, up 5%. Didn't see anything company specific, and then some commentary from AES about selling assets takes that stock higher by 4.8% on the day. AAL prices a convert. Healthy companies generally don't price converts. Let's just leave it there. Norwegian Cruise Line caught a downgrade. Royal Caribbean caught a downgrade. Both of those stocks down over 6%. And NTAP down 4%. Very bearish rating here at Chaikin Analytics. Nothing company specific to drive trading there. Same with Win. Didn't see anything company specific on the news front there to take that stock down 4%. What I will say is obviously these leisure names levered to the extent that some are calling it a second wave. I would argue the first wave never ended as it relates to COVID, but case counts rising again. Okay. So just something to be aware of here. I know that these stocks are, in the day trader realm. If you're in that camp, good for you. Use stops, manage risk. Because if they turn, they're going to turn hard, I think. And you don't want to get trapped. Use your stops. All right, cyclical rotation trade losing steam. I apologize for how cluttered this chart is in advance, but I really wanted to give you a sense of the four kind of cyclical sectors, the ones that started to rally on a relative basis to get a sense for what's happening here. All right, we'll start with the industrials. Industrials relative to SPY, right? You can see, try to rally, resistance, resistance, fade, right? Now, maybe this is an inverse head and shoulders. I don't know. But it's not a completed pattern until it goes through the neckline. What I see is fading from resistance for the industrials on a relative basis. How about the financials, right? Everyone, rates are going higher. Financials are going to do well. I see a fade from resistance and moving lower on a relative basis. How about energy, right? Energy had a nice run. There's no two ways about it, right? Bottom in March, right? Nice steady uptrend. Off those March lows relative to the SPY, beginning to break down again. And then finally, materials. To me, materials was always the best of the bunch. And I guess if I was going to play one area to have some exposure to the possibility of this gaining traction again, it would be materials. If we take a look at that uptrend line off the March lows, it's still intact. But the point here is this just looks counter trend to me. And maybe it's consolidation through time before a reversal higher. That's possible as well. But I'm not there yet. And these groups have underperformed for so long that I'm happy to miss the low to ensure that the trend is in place and then try to catch the bulk of the trend from there. I don't need to be a hero and try to call the bottom in the value cyclical trade. Because I don't see it, much as I don't need to be the hero and call the top in the growth trade, right? So there's the rotation losing steam as tech breaks to a new high. XLK relative to SPY, new high above the 50, above the 200-day as the RSI breaks a downtrend. So momentum beginning to shift back in favor of this theme. And then finally, the gold miners, right? GDX, breakout through 32, pull back, dance around the 50-day, looks to be rallying on a relative basis as well. That'll wrap us up. Take us for a test drive. I'll be back with you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.